Welcome to Investing in Intelligence, where we talk about artificial intelligence companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Dell. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So Kai, jumping on here, interesting backdrop for the markets over the past week. Dell, interesting drop we've had recently in that. Any initial thoughts? You want to jump right into Dell?
Yeah, had an interesting week, especially Friday. We had an inside day, however, an upside reversal. As well as we've seen a lot of companies sort of in this 3 weeks tight. And so what a 3 weeks tight chart pattern is essentially is that if you put on the weekly chart on a company and you see that they're within about a 1 to 1.5% of during those 3 weeks, the last 3 weeks, essentially you can use that as sort of the company's going to break. It could be a bullish signal that the company may break to the upside. We've seen a lot of setups in regards to that. The markets tested the 21-day and 50-day EMA, but Dell, on the other hand, took a hit last week, as well as a lot of software AI stock plays. So, yeah, what's your take on Dell? Get right into it. Is the drop too much, James? What's your take?
Yeah, so I was just pulling up the Dell because you have to look at stuff in context. So 1 year it's up 191%. 2 years it's about the same. But let's look at 6 months, it's up 91%. 3 months it's up 9%, and then the 1 month it's still up 5%. So it's still up 5% over the last month. So last 30 days we still have a return that's pretty much 1 month of 5% when most of the market is looking for 5% in a year. I mean, the average return, people hope for 5 to 7% per year as returns as an average return per year. So Dell has still done that in the last month, even though we're down. Now, of course, when you look at the 10-day or the 20-day, we're down 21% over the last 10 days or so. So no one wants a 20% loss over a period of 10 days, but who really lost out? Like who's the big loser here? Well, people who bought in the last 10 days. So people who bought right before this big drop are the only people who have lost 21%. And going over to our website, I saw that we bought in at $70. So our entry price is $70. The price of Dell right now is $132. So this is still a huge return on investments, almost 100% return, even though we had this big drop. And we can look more at that drop and talk about the reasons for that. But that's my initial thoughts. To answer your question, that's my initial thought.
I want to ask you a few questions. So is Dell overvalued to you even after the drop right now, or is it at an appropriate value?
Yeah, that's a great question. I would just default to the price to earnings ratio, good old PE ratio for Dell.
Well, my point is the trailing PE is around 20. And so the forward PE, let's just say, is around 18 with Dell. Its EPS is in the 4 to 5 range. So do you think that the run-up has been warranted in Dell? Apparently the run-up, I'm going to say, is due to AI. And Dell may be dragged along by this sort of AI play. AI investment going long in this particular underlying company. However, do you think it was in reality worth a price of $130 a share?
Or 179. Let's see. So Dell hit $179, 179.70 to be exact. Last Wednesday. Was that 2 Wednesdays ago, or was that last Wednesday? So Dell hit 179.70. I want to say last Wednesday, actually. Last Wednesday it was at 179.70. Right now it's $132 because it's down another 5.3% right now. So what is it worth? I do think it's worth a P of 18, but I do have some problems.
Okay, so but be doing the math. PE of 18, EPS of 5. Let's just say EPS conservatively of 5. That's 100. I mean, 5 times 20 is 100, James. I mean, I'm not very good at math, but let me just do.
That's where I think the stock should be. So just to explain that a little bit more, I do think it should be. I think the price target is probably around 90 something, 100. So Barclays analyst Tim Long has put a price target of $97. He used to be at 98. He didn't like this last earnings report, so he changed it to $97. And I do think that is the price target, $100. I think this 179 is AI euphoria. Things have gotten out of control with certain stocks. Not with Nvidia. I think Nvidia is still fairly valued.
There's only one Mufasa, and the rest of them can try to throw Mufasa off of a cliff. However, Simba will rise. James, there is only one Mufasa. I just saw the Lion King. But anyway, yeah, I mean, I don't think Dell is going to overtake. I mean, right now the AI battle is sort of coming into play. But here's the thing: is Nvidia is the king, and the king is the king. And I don't think Dell is going to take away any of the market share or basically win in a competition with Nvidia. I don't think so.
There's very few things that are as good of a pure play as Nvidia in AI, because it's like everybody needs GPUs, but then everything else, the needs are a little bit more nuanced.
The, the growth is not there with Dell like it is Nvidia. The growth is not there with Dell like it is Nvidia. I mean, Nvidia is up another 3%, 4%. I mean, 27% last month, and I think it's warranted.
Yeah, I think it's important to understand why, though. So, Dell is a massive company that operates in a lot of different segments, including consumer and corporate PCs. So, they're exposed to a lot of different areas, whereas NVIDIA is mostly just selling GPUs right now. And the biggest comparison, the most important comparison, is actually SMCI. And we told people that SMCI and Dell were a good buy quite a few episodes ago. So if you look back to when we had our SMCI episode,
I would have disagreed on Dell, although SMCI I still think is going to show the growth because of their basically them putting these GPUs on racks.
well, wait a second, let's go back. We need to clarify. We need to clarify some things here. So first of all, back in our episode, and we're going to have to put in, I'll clip some footage from that episode and show it in this episode. But back in that episode, if I remember correctly, we didn't talk a whole lot about Dell. You were a little bearish on SMC. You just thought it might be overvalued at that time. Now it's a lot lower. SMCI is not at the 1100 price. It's down closer to 700 now. But Dell, we didn't talk a whole lot about it, but I mentioned Dell several times saying, hey, if you're interested in SMCI for these reasons, AI servers, look at Dell also because it's the number two player. Now, since that episode, there was a big event, I believe it's called GCI with NVIDIA, where Jensen Huang stood up on stage and he talked for a long time. And guess what? He called out Michael Dell. He called out Dell as a company for putting these GPUs on servers numerous times in his keynote presentation. He didn't really mention SMCI so much. SMCI's logo was on the screen, but he was mostly mentioning Dell as the premier partner in installing NVIDIA GPUs for customers, for the hyperscalers. So that was one reason why everyone bought up Dell, and also just Dell's lower PE. Everyone bought it up for those reasons. But guess what? Dell is a big company with a lot of exposure to a lot of areas. Some of those areas are declining. If you listen to their latest earnings call last week, it wasn't all roses. It wasn't like a walk in the park. So I would say SMCI is the big growth stock for AI servers. If you want to buy something with massive growth, now there's a little bit more risk because SMCI is issuing debt. They're growing so fast. But the big problem I have, Kai, and I want to tell you that the big concern here, and the reason we had a 20% drop, we had a huge drop, 17.9% gap down after Dell's earnings. And the reason that people were upset is because of margins and backlog. So their backlog was not as high as the analysts wanted. Analysts were hoping that there would be more demand for the AI servers than what actually wound up happening over the last quarter. And then their margins. And this is the big story, Kai. It seems to analysts that Dell may be selling AI servers at close to 0% margin. In other words, Dell may be making $0 on every server, on every AI server that they're selling right now. So let me ask you, Kai, how do you think? I mean, once again, the main way that Dell is supposed to benefit from AI is these servers. So how are they going to benefit from AI if they're making $0 on every server?
Well, I look for good value. I mean, so with Dell, I think the reality is EPS is 5. It has shown growth. The PE is around 20. I'm just stating these numbers because they're round numbers. But the
Are you sure
growth
it's
is
showing
not
growth?
there like a company like Nvidia. What now?
So Dell is hoping to grow at the end of this year, but from what I understand, they're not. I mean, they haven't had a lot of growth recently in recent
I
history.
didn't like what Dell was saying. I mean, I didn't like some of the backlog. I didn't like some of their outlook that they were saying, and I do think that the drop was overdone. I think the Dell actually maybe you could look at as around the point if you're doing a sort of a swing trade. I wouldn't. However, I will say this: back when we did that episode on SMCI, both of us had a price target of SMCI around 1,200. However, SMCI was trading around 1,000 at that time, and I kind of said to you, "What goes up, what comes down." That is gravity in regards to the market. However, there's sort of an inverse gravity as well. It's a good company with good numbers. What goes down must come back up, and so in regards to Dell, you just want to find appropriate value. I don't think Dell was worth $170 a share. And so we're seeing the results of that. However, I only have two things to say, and I don't really know, I mean, from a layman's perspective and what goes into the sort of how these GPUs and go on to what Dell's selling and everything. I haven't really gone into that or looked up that. But I will say Nvidia is king. Their GPUs are better than everyone else's. They have the best engineers. I don't think it's going to be, they're going to be a competitor that is difficult to deal with over the next 3 years. And I will say SMCI had shown significant growth in putting these sort of GPUs on racks and selling them. And so I would bet on SMCI over Dell. That's my particular opinion. I still hold a price target for SMCI around the 1,100 to 1,200 range for the year.
Yeah. The Nvidia doesn't really play into the Dell conversation that much. So Nvidia is also an AI stock, and we know it's the king AI stock. But let's say, I mean, you can't have 100% of your portfolio as a single stock, not to mention a single sector. So the real issue here is SMCI versus Dell. That's the real question. And you could include HP because HP supposedly does these servers also, but HP is the big loser. They apparently can't even get enough GPUs to do the servers. So HP corporate, there's two different HP stocks. HP corporate hasn't done that well. So the real issue here is Dell versus SMCI. And what I want to know is why does SMCI have decent margins for selling and installing AI servers and Dell doesn't? Why is Dell's margins on AI servers
Point. I
zero?
don't want to pretend to provide an expert opinion on that. However, if I'm conservatively, or if I'm going with a price target of Dell and saying, oh, 120, 130, and we're already at 130. However, my price target with SMCI is 1,200 potentially with the growth that we've seen. Then when I'm going to take one of the companies at a discount, which one am I going to take? I mean, I'll take an SMCI over Dell right now. I mean, just looking at the numbers.
So okay, I should be fair. There's supposedly a big corporate PC refresh going on. So supposedly, companies that bought new PCs for their employees a few years ago during COVID are about due to buy new PCs. So apparently, Dell may benefit from the corporate PC refresh along with HP. But that being taken out of the picture, if we're really looking at these stocks as AI plays, SMCI any day. For me, SMCI any day over Dell. I will take a company that can make 30 or 40% margins on an AI server over a company that's making a 0% margin on an AI server. So I'll take a 30 or 40% margin company over a 0% margin company. I don't know why Dell can't make money. They did say on their call that apparently they're not competing on price. So apparently their prices are not the most competitive prices in the market for AI servers. They did say that quite plainly.
Well, take this what you will for Dell, and we're not going in sort of, James and I aren't going in too much as far as what the company is, the CEO, some of those things. We both didn't like some of the things Dell communicated in regards to their earnings call. However, Dell is a very good company. It is a company potentially worth owning. It just find it at the right price, in my particular opinion. And right now, the chart does not look good. Now, here's the thing about SMCI, and we're talking a lot about SMCI because it's a direct competitor with Dell. But the SMCI chart is a very difficult one to trade, James. It's a very difficult stock to necessarily trade, or if you're trying to be an informational trade, do informational trading. It's a difficult one because there has been significant reward with SMCI owning it, and there's also been significant risk with owning SMCI. And so
Yeah. Technically, this is not an SMCI episode, but if you'd like, we can look at some charts for Dell. I'd like to do a really quick.
Well, the thing about Dell that it just doesn't concern me in regards to this AI, and we've talked about this again with the technological
It should
revolution.
concern you.
Well, it doesn't concern me as much as some of the software, some of the soft Salesforce earnings concern me more than Dell. And I'll tell you why. Is because inevitably the end product of this AI, the build out, the end product of AI has to show profitability. If it doesn't, AI is going to be a bubble. If nothing, if this leads to no money, no technology that makes any money, it will be a bubble, and unfortunately, it will burst at some point. However, I'm watching companies like ServiceNow and Palantir and Pega and some of these other companies, for example, Salesforce, to try to determine what the endpoint, what the end game is going to be. At Google, I'm watching Google. I'm really watching sort of, okay, let's say AI servers, these Gemini, ChatGPT are outsourced to just open sourcing sort of, then it's going to be advertising and how these companies make money.
Yeah, yeah. I mean, I agree and I disagree at the same time. So I agree with some of the things you're saying, but I kind of disagree with the underlying premise that software is going to do better. I think 3 years from now, that might be the case. But right now, the entire market has agreed that hardware stocks are pretty much all you want to own. We've got an enterprise software recession going on over the last 2 weeks here, where these stocks are just having unthinkable drops, these software stocks. ServiceNow that you mentioned is one of them. UiPath, JFrog we know is down. The one that has hurt me the most is Nice. They had a great earnings report. If I want you to look at that one when you have a chance, go look at Nice, ticker symbol NICE. Incredible enterprise software company. They kind of compete with ServiceNow in certain areas, but they don't in other areas. Like I said on our last episode, I went ahead and I sold some puts after it had a 18% drop. Well, it's been down only since then. So we're looking at a 20-25% pullback on this stock, and my puts went in the money and I closed them today. So I took like a $1,500 loss today, or maybe a little bit more on closing these puts, essentially covering my shorts on these on an enterprise software stock.
I'm not. What I'm saying is that the picks and shovels, the GPU, the chips, all of those things are in regards to creating an end product that is AI in whatever that looks like. And so if a company like ServiceNow doesn't have the demand or the sales or return customers, then that to me is the more concerning than a company that may be losing in regards to putting these servers on racks. If the demand is still there for the end product, then companies that are producing the GPUs, the chip makers, the chip designers like Nvidia will be profitable and will continue to do well. You're not going to lose out. However, if there is no demand for ServiceNow, then companies like TSM, ASML, Nvidia, they're going to struggle later on.
So two things there. So first of all, there is demand for AI servers. There's massive demand. Even Dell's backlog grew, but still they're not profiting. So somehow they're still, because their margins are like 2% on AI servers. So I would say watch out for Dell. I mean, they're going to do better. They're going to do well. And NVIDIA obviously likes them if they're up on stage talking about Dell instead of SMCI. But SMCI seems to have way better margins. So if anyone is listening to this right now, isn't sure what we mean by margins, for every dollar that SMCI makes, they're keeping 30 or 35 cents of that as profit. They get to keep 35 cents of that dollar. For Dell, for every dollar that Dell makes on their AI server segment, they're keeping 0 or maybe 2 cents of that dollar. That's a big, big problem. So I would say people need to be aware of that and watch out for that. Dell's a big legacy tech company that has tried to pivot into these AI servers, and we're not entirely sure if they're really doing all that well as far as each AI server. Now, but I want to be fair, and let me just say real quick, Kai, what Dell said on their call. Dell said, for every server we sell, that's not the endpoint. Okay, so we sell and we install the server, but they're now a Dell customer. They're going to come to us for other things. They're going to come to us for repairs, and we'll make money over time. We will have added services to this server that we place. So we will eventually make more money off the customer, just not initially. SMCI apparently can make $35 for every $100 initially.
Which is why we've pointed out, for example, in companies, Intuitive Surgical, as a company, it's not necessarily all about the robot sales, even though robot sales are something to look at. It's the number of procedures that are being done, because the number of procedures are going to increase. And same thing, if the robot fleet is out there, there's inevitably they're going to break. They have to sell replacement parts. There's parts to the robot that they utilize. It's the same with cars. It's the same with ASML, a company that does lithography. Though when they sell their machines that make these imprint on these chips, they have to replace the parts of these machines as well. The more machines out there, the more they make money, and it's the same with a lot of those things. So, um, I mean, one of the problems with Apple is that their products are so good, they last longer and longer, so you don't have to replace your computer as quickly as you used to. Um,
Yeah, we can wrap up on at least the Dell topic, but what I will say just in closing is the software side of AI is going to take a little bit of time. So we don't know
how much time?
how much time. That's the real question here. So we're going to see in the next few days. I want to say about a week from now, actually, that Apple's going to roll out their Siri AI. All of this stuff, all of this software, AI, Chat GPT, Siri AI, it requires GPUs and it's going to require AI software. But the AI software side, I think for corporations, maybe more a year away, 2 years away. It's going to be huge. It's going to be massive. It's going to be every employee in America using AI software in one way or another. But that might come a year or 2 years from now. So I would say, yeah, I'd say we're not there yet on it. You know that I use ChatGPT every day, and every time I use ChatGPT, the 100 times a day I use ChatGPT, that goes back to an Nvidia GPU running in a data center that SMCI or Dell installed that server in. So these companies are necessary for something I do 100 times a day, but not every American is doing that. I've been pushing you. You're starting to get into ChatGPT. Your brother, who's a friend of mine, doesn't use it at all. Your parents don't use it at all.
Well, it takes a long time to change behavior. I mean, I don't think that unless, and that's why I think that something like Siri or something like the iPhone is going to be revolutionary, because everybody uses those products on a daily basis. And so when AI is integrated into those daily use products, then they're going to become more and more comfortable with using AI. I do believe the days in which you get onto Google and you type in something to Google are going to be over. The question is how long will that be? I'm saying 10 years. Before 10 years, I don't think it's going to be two. But I do think, because, and mainly the reason is not because of the products that are there. I think it'll be because of behavior takes a while to change. And that's just human nature. It's going to change. It's going to take a little while to change behavior.
Yeah, and it's funny. It's funny you said people aren't going to go to Google anymore. So that's pretty much the end of Google if that was true. Because
I worry about Google. If they completely lose the AI race and 90% of Google's revenue is from advertising, and it's basically outsourced, and you can get on your Facebook or you can get on your app and you basically can you do what you do with Googling everything, but instead I just ask it to my AI, then where does that leave Google? And to me, this would be sort of an all or nothing thing. I have to win if I'm Google. Gemini has to get better, but I telling you what, I've used Gemini and I've used ChatGPT, and ChatGPT the Microsoft should say is so much better. It's, to me, it's better.
it is, and they're still to this date the biggest winner, even though it was over a year and a half ago or about a year and a half ago that they brought out ChatGPT. They're still the big winner in software, and it is a software. ChatGPT is a software. There's an API that OpenAI has that can plug into other softwares. They're the big software winner. When will there be a competitor for ChatGPT? I mean, I don't see a real competitor.
Revolutionize the way the workflow for healthcare. It really will. I mean, nowadays, if you're working in a hospital, for example, I'm just you going to go through this field and you're trying to research a topic, you have to go and look up the either Google, or you have to go to an actual medical journal and look up data, or you have to go to Up to Date and ask questions and read through these long articles, or basically search something and read through long articles. All you have to do is type a question and have a conversation, and it is incredibly accurate.
But I don't think that's the issue. The issue that we're discussing right now is when is this actually going to happen? And then I think the issue for monetization is not even the when. So you and I just agreed it's going to happen. The fact is there. when is a big issue, but the how is who's going to make the money, who is going to bring it to a hospital where a doctor works, or a clinic where a nurse works, or a customer service center. And I think it's going to be these software stocks, but they're not doing it. And then how are they going to do it? So ServiceNow, JFrog, Palantir, Palantir for government and for defense AI, like these companies have to do it, but are they really doing it? How are they doing it? What are the risks? So we get to find out about Apple next week. Next week, we will find out, is Apple going to bring AI to every man, woman, and child? If Apple, child, I don't know how many children have. Hopefully, a lot of children aren't on their on Siri every day or on their iPhone every day, but we know that a lot of children are, if you consider children to be less than 18. So are they going to bring it to all of America next week? And if they are, I think that changes everything. I think I'll finish with this. I think if Apple brings AI to Siri, then I think everything else changes. Then I think medical starts to change. Then defense starts to change. I think if Apple brings AI to the average American, all the other sectors start to bring AI to the average American.
And you and I both would agree on this through a lot of research, in that if you talk about AI companies in regards to how they're changing the world, Apple would not be in the top four for me. It would have been Microsoft, Meta. But however, who has a large percentage of my portfolio is Apple. Okay, full disclosure. And you and I have debated about this. That was not going to be in yours. Apple is now it's heading towards sort of a resistance level of 200. But I've gone long on Apple because I do think Apple should have been included in the top four. I think inevitably they will be. They just may have to do it in a different way. But it wasn't for the longest time. We'll see what happens. Maybe we should talk about Apple this next podcast.
You know what? Let's do it. So I want to do a podcast after Apple has their event, and I want to say their event is next Monday, but we can check on that. So let's talk about, as soon as Apple has their event, let's both watch the event and do an episode on it.
Well, let's just do a special podcast for Apple right after their event, in which we talk about some of the things they have to say. And it could be interesting because here's the reality. We could talk about you've been on the forefront of a lot of technology. For the listeners out there, James was using a Mac Apple products before most people were, and James was invested in or owned a Tesla before most people do. James uses technology in a lot of wrong ways as well out there that haven't gone well for James.
Crypto. If you're talking about cryptocurrency, I think you're talking about referring to cryptocurrency with that one. But
Me, Gronk, no, that's not real money, James. But James is known about a lot of different things, or been on the forefront of technology. So let's do that. Let's do a podcast on Apple right after they talk about Siri next week.
Yeah, we'll plan for that. Yeah. I know you've got a hard stop in 1 or 2 minutes here, so we can cut out. Now, we actually covered the additional topics we wanted to cover. We actually wound up kind of tying into Dell. The only thing we didn't cover was overall market sentiment, but there's not a whole lot to say. It's kind of flat and steady, just like waiting for inflation to go down, I feel like, is overall market sentiment. So not a whole lot to say there, really.
Yeah, the market's just it's starting to get old to me. It's a own PCE, now jobs report. We've got the jobs report this Friday, and then the Fed meeting next week. I mean, it's essentially a 0% chance they're going to do anything with rates in June and July. September is a potentially market mover, in my opinion. Basically, anything coming out to me with PCE or jobs report that is incredibly worse than expected, and that may sort of say, oh, no rate cuts. However, I mean, politics do drive some things. We've had a lot of things in the news this last week. And the crypto thing, I mean, we're going to talk about, I look at it sort of the people running for president. There's going to be probably 3 different candidates. And one has been very pro crypto. The other one is kind of wishy-washy. And then you have Robert Kennedy, who would be, but essentially there's a large portion of Americans that own crypto, and it's a big deal. I mean, crypto, it's going to be interesting to see what happens.
Yeah, definitely. All righty. Well, thank you. Yeah. So thanks for listening to our show. Please give us a rating or review, or on YouTube, a like or comment. We'll be back in the next episode, possibly to cover Apple, possibly a special episode for Apple. We shall see. And you can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.